Thank you for being here today. I want to talk about sustainability. I'm framing this as opportunities for investment. I'm here because of the global green and sustainable bond market, which is the area you work in, which is a market that has grown since we began from $2 billion US outstanding to now $6 trillion US outstanding. And there's a storyline that goes with that. Before I go into the detail of that story, I want to give you a bit of context, because to understand the opportunity, we need to understand what's driving the opportunity. We need to understand the challenge. And look, you know a little bit about climate change, but climate change is an all-encompassing threat multiplier, as the US Defense Department has called it, but a threat multiplier not only to countries, but also to investment portfolios. According to the Institute of Actuaries in the UK, most major institutional investors on current trajectories will see wholesale portfolio decimation by the middle of the century because of the impacts of climate change. The impacts that we're starting to feel. We had extraordinary heat in Greece this summer. We've also had extraordinary heat in pretty well every geography in the world this summer. The impacts of rapid warming are starting to be felt around the world. 1.5 degrees, that target figure out of the Paris Agreement, will be met this year. In other words, we're travelling at the worst possible trajectory of climate change. It means also floods, which we've seen all around the world. What it means actually is volatility. The main impact of climate change will be extremes of all sorts. It'll be drought, then flood, no longer rain. It'll be storms that are 2 to 3 times as strong as we've experienced in the past. And a couple of weeks ago, I was in Manila in the Philippines, in the middle of a typhoon. It was the strongest typhoon in record, and there will be many more of these coming through. Of course, that has real impacts on how we manage our societies, how we build buildings, how we create ports or upgrade ports and so on. Of course, there's more than that, because while we're dealing with floods, we'll also be dealing with pandemics. Pandemics are not clearly related to one particular reason, but I can tell you the Intergovernmental Panel on Climate Change's Health Committee tells us that we will see pandemic after pandemic as a result of climate change. It's a feature of all historical periods of climate change that we know. So we're going to see severe impacts on all our systems. We need to prepare. Greece is hardly the most important place for decarbonisation, although there is a decarbonisation agenda. But Greece is an incredibly important place for the impacts of climate change. Heat, wildfires, changes to agriculture. These are all the sorts of things that we're starting to see in Greece in extremes, and we'll see a lot more of going forward. We have to prepare. So that's one part of the storyline. The climate story is not going very well. We have hope yet. Why do we have hope? Because the application of solutions is growing. We've seen especially this extraordinary rise of renewable energy, thanks to the German Greens in 2001 introducing a feed-in tariff that was copied around Europe, and then above all to the Chinese from 2006 onwards, who adopted the largest industrial planning exercise in the world around energy, partly for air pollution reasons, partly for climate change, and partly for security reasons. They didn't want to import fossil fuels where they could be blockaded by the US 7th Fleet. So they decided to invest heavily in domestic production of energy, or near production of energy. There's a lesson there for Europe in the middle of the conflict we currently face, when we find that importing gas from Russia proved to be a problem, that importing gas from the US is a bit of a problem. Trump is not the most trustworthy trading partner, and importing gas from the Gulf is potentially a problem given the conflict there, given Israel bombing Qatar and so on. We actually have options in Europe, exactly as the Chinese saw they had options in 2006. And as a result, last year, they invested 60% of the world's renewable energy investment. And in fact, last year, according to the International Energy Agency, I'm on their Finance Advisory Board, 93% of electricity generation investment on the planet was clean energy. The clean energy revolution has largely been won. What we have now is a management of existing assets, sweating of existing assets. How long it's going to take us to be able to phase out the assets that are challenging for the maintenance of any kind of equilibrium in our nature and our atmosphere. But we're already in the middle of a revolution. We're also in the middle of a revolution around transport. I put up electric rail because we need to be looking to mass transport as the most resource efficient. We now have a great metro in Athens. Every city needs a great metro, needs multiple lines. But of course, electric vehicles are the story you hear now. Electric vehicles are not something that Volkswagen is going to sort out for us. In the rest of the world, electric vehicles are here. In Ethiopia last year, 60% of cars sold were electric. In Nepal, 70% of cars sold were electric. In Pakistan of all places, 26% of cars sold were electric. Across emerging markets, electric cars are now price parity with petrol cars. That is the same price as CapEx. And they are cheaper to run, anywhere between 20% and 60% the cost of running petrol. So emerging markets are shifting very, very quickly. It's Chinese electric cars. It's not Volkswagen, it's not Mercedes-Benz, and it's certainly not General Motors or Ford. No matter. This is an incredibly important shift, and it has important ramifications for supply chain. It has important ramifications for industries that supply the auto industry, from oil to carburetors. If our industries are not ahead of that story, we will die. If those industries are ahead of that story, we have a chance of being profitable and creating wealth for our shareholders and our citizens. Greece is an economy that supplies. Greece is an economy that needs to understand where the world is going to ensure it can chart a path towards wealth creation. It needs to be future fit. And that's the situation we are now. The future is changing before our very eyes. It's changing very, very quickly. We need to prepare for that future and start looking at different ways of earning an income. We need to look at industrial strategy that will make sure we invest in the right kinds of areas. We need to look at policy measures that ensure a rapid shift towards industries of the future. Of course, there are many industries of the future, but just back to the resilience for a minute. When we look at resilience, it's not just a matter of raising the height of the wharves in Piraeus. It's also a matter of looking at our urban settlements to be able to survive heat. We need to green Athens. A lot more trees will lower the ambient temperature by 5 degrees. That's going to become very important when we see every year an extended period of those heat waves we saw early this year. We need to ensure that our social systems can deal with crisis after crisis after crisis. We need people who don't have much money to be able to get up and work the next morning. Otherwise, from an investor perspective, Greece becomes an increased default risk. Greece becomes a worse investment. The more we have systems of resilience, then it can ensure our economy can recover after each crisis, because rest assured, crises are now certain. They're not possible, they're certain. They will be frequent. We won't be able to avoid them. We can't build to stop them. We have to learn to recover faster. The more we have the social support mechanisms in place, the more our economy will get back to work again the day after. That includes things like the social housing push that the Athens mayor is trying to get up in this country. We have an extraordinarily low proportion of social housing in Greece compared to Western European countries or other countries. It includes the nature of health provision to make sure that we have the right kind of civil system to be able to respond to heat, to be able to respond to pandemics, and so on. and it includes social support programs. The more that we have things we discovered in the pandemic, like helicopter funding, unemployment relief and so on, when there's a crisis, the more our societies will be able to recover. It includes support for industry and commerce in the middle of a crisis. It includes making sure our infrastructure is adapted to increased heat, to storms, is kept away from the coast and so on. We published at Climate Bonds a resilience taxonomy, which is a guidance, 1,400 areas you need to look at, and we'll be doing more work with governments around the world on detailed guidance of what needs to be done. This is an opportunity to attract investors. Across the world, where we speak of investors about resilience, whether it be Nippon Life or BlackRock or State Street Global, they understand that we now need to worry about reducing the risk of default going forward. As you will be aware, in the world I live in, fixed income investors, defensive strategies are the most important. Making sure that we can continue to pay pensions when they come due is the highest priority. As a result, evidence that we are improving the ability to ensure we can pay our interest is critically important to investors. And amongst the credit rating agencies, we have a friend from S&P in the audience today. S&P, Fitch's, and Moody's all have teams now factoring in physical impact risk and the potential for default as a result. And now they're moving towards, or they're supporting the idea of measures that will address those risks going forward. That means water defences, especially water. In Greece, it'll mean agriculture in particular. It does mean the nature of urban development. We will be 80% living in cities by 2050. We're currently at about 56%. Because every time there's a crisis in the land around the world, more people will be forced into cities to go with the current drift that's happening anyway. We need to make sure those cities are not only productive and wealth creators, but also green and survivable. They don't become way too hot for the future. We need to ensure that our nature is resilient. That doesn't just mean protecting and restoring, although that is incredibly important, given we've got a crisis of biodiversity around the planet. But we need to look at integrating nature into other activities like cities, more parks, more nature corridors, and how we integrate nature into farming. We're going to need to manage our use of pesticides much better in the future to avoid killing off all the bees, which will kill off a future if they all go, and so on, and so on, and so on. And our oceans. Greece, early this year, announced the Marine Reserve in the Cyclades, part of European Commission policy. Well, the European policy is that we move to 30% of all our oceans dedicated towards marine reserves. That is areas where our fisheries can recover. Compared to other oceans around the world, the Mediterranean is a biological desert. We have fished ourselves out of all the great fish. It's amazing that we still have a fish catch still left. There's a very simple solution to that, and I grew up in the Pacific, in coral atolls. I know what a healthy fishery looks like. We need to put aside large territories of the planet to allow the recovery of nature. It's not just the fisheries. We know that if we allocate a minimum 15% of oceans to zero fishing and zero human impact, tourism yes, but not the capture of fish, they will recover in a space of about 20 years. We've seen this on land too. The extraordinary story of the proliferation of nature in Chernobyl, because humans were kept out for so many years, is something that we need to learn for how we manage our states. I say this because nature is the most urgent crisis because of its implications for how we grow food and how we prepare. But I have some good news for you. We need a lot of capital to be able to make this change, to be able to build the cities and the industries of the future, to be able to invest in a way that our children can have a reasonable life in the context of the challenges we face. We need capital. We need something like $10 to $15 trillion US per annum being invested in these solutions. It's not that bad. About 2/3 of that is changing the procurement requirements of what we're doing now. If you are investing in water infrastructure, well, yes, you should think about climate change. If you're not thinking about how hydrology is changing, then you are being negligent. I'm afraid a lot of our companies and infrastructure are still being negligent around the world. There's many projects to try and develop that. At least 2/3 of that capital flow is changing the nature of procurement for existing capital flows. Transport that is low carbon, not transport that is high carbon. Industrial investments in cement or steel that are low carbon and resilient, not high carbon, for example. In Europe, most of our blast furnaces for steel are coming to the end of their life. We faced a big decision now. Are we going to rebuild coal-burning blast furnaces? Are we going to shift them entirely to electric arc furnaces, or are we going to build furnaces that can use hydrogen generated by green energy? It's a simple problem we face. Making it work, of course, is hellishly difficult, but that's exactly what we have to do now in every sector. Make decisions that are future fit. And I will come back to that term again and again and again for Greece. How do we make the Greek economy future fit? And then how do we attract capital around that idea? Luckily, extraordinarily, fantastically, we have the capital. We have this amazing success in the last 70 years in our developed economies. We've created large pools of capital, pension funds, insurance funds, sovereign wealth funds. In the institutional investment sector, we have between $130 and $140 trillion of capital assets under management. This is investment managed by investors who have a fiduciary duty to look long term. They are required to match assets and liabilities over the life of our children's pensions. This is extraordinary. I mean, I'm not saying they're doing it. I'm saying that's their fiduciary duty. And they are waking up to that slowly but surely. That means they have an investment in creating futures that are going to be able to pay returns over the longer term in a world where our corporate structures have been overwhelmed by short-term shareholder pressure. I have a lot of sympathy with Donald Trump saying, let's move to 6-month reporting rather than 3-month reporting in the US, because the 3-month reporting has really heightened short-term stock price movement pressures. But the point is, we have the capital. And this capital has been investing green. We have proof that the capital will move. This is one of the great wins of the last 10 years. I started off my talk by saying we've moved from 2 billion outstanding in 2010 to 6 trillion outstanding now in this market. That is proof. Of course, we've got to package it. It's not saying, here's an investment that is green, it's going to be 100 basis points low interest rate than everything else, but you like that, don't you? That doesn't work. What does work is you have two investments, one ordinary and one green, similar risk yield, but one is green, the investors always go for the green. The subscription rates in those kinds of circumstances are extraordinary. The French government typically gets 18 times oversubscription for its French sovereign bonds. But SNCF, the French state railways, will also get 14 to 15 times oversubscription. It might be as low as 2.5 times to 3 times oversubscription, but we have continued oversubscription in this market. In the European market, we have what's called a greenium, differential price. As a result of secondary market trading, this is why we need exchanges to ensure liquidity in the market. We've then seen differential performance of green investments in secondary markets. Well, it sort of makes sense. If you're selling off because Donald Trump has tweeted something, you tend to sell off the vanilla stuff before you sell off the stuff with a bonus feature. That means they retain their value, they perform at a premium in secondary markets, and that drives primary price benefit in the bond market. We see some of that happening in the equities as a result. Green bond issuers tend to get a stock price bounce, and that stock price bounce tends to stay, according to the academic research. And then we have a separate discussion about the premium of people who are IPOing of green. We have, in China and India, significant numbers of green IPOs come to market with what they think is a premium because of their green credentials based on investors in those markets, not Europe, in China and India. We've seen the growth of sovereign issuance. This is now for some 40 countries around the world who are issuing sovereign green bonds. And on the back of that, they are bringing policies in line to allow them to issue more bonds. Pretty well every government that's issued green bonds wants to do more. The challenge is finding more to do in this area. That is engaging ministries of finance, not ministries of climate change, not ministries of environment. And that's the point of it. Treasuries are being engaged around the world. We've had a couple of other wins in this period too, right? We've seen the development of regulator engagement. The network for the greening of the financial system is made up of 150 of the world's central banks. It's talking about risk associated with climate change. Nowadays, you don't get an argument anywhere in the world about whether there is risk around climate change amongst economists. You might in the White House, that's a separate argument, but amongst people who are actually learned in this area. And that's because the central banks have engaged in this and pushed this idea. Many central banks have significant incentives for green. The Hungarian central bank has a risk weighting program where if banks issue green property bonds, they get preferential risk weighting. We have this Chinese central bank that has a cheaper wholesale funds for banks if they post green bonds as collateral. We have the Philippine Central Bank that has collateral framework benefits for green bonds, and so on around the world. In Europe, of course, we've seen the Sustainable Finance Action Plan. We're in the middle of a simplification of guidelines and regulations that became too complicated. I'm a big fan, and I've been part of the project for the last 8 years of developing these regulations in Brussels, but it went over hand in the last 3 years. The simplification agenda that Ursula von der Leyen is driving is very productive, very useful. It'll make it a lot easier for everyone in future. But there is no pullback about the ambition of the European Commission in greening the European economy. We continue to see the push by the European Investment Bank to lend. It's now called the Climate Bank. We continue to see other banks like the Council of Europe Bank addressing resilience measures around climate. We continue to see further programs by the European Commission to support green finance and so on. We continue to see countries in Europe bringing in green budgeting measures, tracking like Austria is doing, all its expenditures in line of taxonomy and looking to increase those each year. This is a movement that hasn't gone away, that is not moving away. There are some speed bumps ahead of us. Air conditioning. Goodness knows that is a speed bump in Greece. As the world gets hotter, I want air conditioning. Well, so does everyone. We expect to see, according to the IEA, a tripling of air conditioning demand between now and 2050. A tripling, which is vast energy demand. We have artificial intelligence coming in. I was on a panel at the OECD in Paris yesterday on artificial intelligence. We had Google, Meta, Salesforce, and so on. The demand for energy is vast. The demand for water is vast. That's a speed bump in our shift. While new energy is clean, it's going to hold back the phase out of fossil fuels. We have to work on that. Luckily, the major customers of data centers are desperate for legitimacy and are desperate to go green if they can. That provides opportunities for anyone who can develop green energy. Of course, we have some policy challenges around the world. We have Trumpomania, which is scaring everyone. Of course, in some ways, the Trump agenda needs to be understood as choppy water on the ocean, the sea of Athens. It doesn't change the currents. In the US, for example, where I speak with major investors from CalPERS to Nuveen to BlackRock, it's very clear there is nothing being said about climate change anymore. There is nothing being said about diversity exclusion pool. They are all hiding under the table. But it's also very clear that they have not changed their investment methodology. They have not reduced their investment appetite for green, that they are still investing in exactly the same way. They're just being quiet about it. That's what happens when you have an infantile, capricious royalist head. Everyone just hides and keeps doing what they're doing now. And that's clearly what's going on And then in Asia, where I spent last month with our various conferences, the US is not on the horizon. In our conference in Hong Kong 3 weeks ago, the US wasn't mentioned. In our conference in Mumbai 4 weeks ago, the US wasn't mentioned. People are just moving in. Transition finance, resilience finance, green finance, ESG. These are the flavours of the month. The world is shifting despite the noise that we see in front of us. We have, for Greece, some opportunities. Clearly, there is an opportunity around the energy revolution. This is an opportunity driven by the security agenda, where we need to ensure we are not dependent on importing fossil fuel if we are to maintain our security and defence position in the future. We are vulnerable in Europe. That means there's a policy argument on top of a climate argument, on top of a pricing argument now, to rapidly grow clean energy. Of course, that's an opportunity for Greece. It's also an opportunity for distributed energy. We have a low penetration, relatively, of rooftop solar, of battery. In Australia, where there is a modest incentive for house batteries in place, they're installing 1,000 batteries a week. And that is changing the economics of virtual power plants. Oh, that's an opportunity too. We should be seeing more companies running virtual power plants in Athens as they now are in London, in Boston, in Sydney, in Shanghai, in Beijing, evening out the highs and lows of energy demand and supply, and making money by integrating multiple forms of energy generation, storage, and of course, usage. We have the opportunity here to make money for the transshipment of power, bringing in cable lines from Egypt and selling it on to Germany and Northern European countries. We have the opportunity here to be creating ammonia for shipping. Greece is still one of the great countries for shipping in the world. All the major ports I speak to in the world, and recently I've spoken in Shanghai to the government, in Singapore to the government, now understand that the future of shipping will be ammonia fuel ships. The only question is how quickly we can generate the ammonia and make it available in the major ports. We could be doing something of our industrial planning in Greece. Of course, in cities, we have to change the opportunity to grow green buildings and resilient buildings. There's some simple things we could do. In Athens, we should have a rule. If you build a zero carbon building, you get an extra height, extra floor space. Otherwise, you don't. Every developer in the city will be going for green zero buildings. There are many fiscally efficient measures we can do. We have an opportunity to tap investor demand. We have an opportunity to take advantage of all those investors out there. Greece could be a laboratory for Europe about how to do this. Greece already has one incredible moment in history to take advantage of. The switch in sovereign interest rates. You know, I had a great deal of pleasure in the last couple of days in Paris, reminding the French that their sovereign interest rate is currently higher than Greece's. Full credit to the Debt Management Office here, full credit to the managers of debt. We're down to 3% sovereign. This is a time for us now to think about how to use dedicated debt, not general debt, towards industrial transition. How to be a laboratory for the packaging of product to attract international investors. How to be a laboratory for the absorption of capital quickly with ambition. How to be a laboratory for crafting a future with the ambition that we need to create something we'll be proud to have our children live in. That's our challenge in this room. That's our challenge in this industry. To use our skills, to use our companies, to use our ability to be able to attract and deploy capital to build a future that is worthy of our children. Not a future that is a future we don't want, which is the one we are currently on the path to achieving. But a future we want. We can still create. We have that time. That's why today's event is so important. Thank you, ATHEX, for running it. Thank you for being here.